So it's been a while, so we have a lot to go over, but still, even with the market dropping so much, which is what I've been asking for, did not even take advantage of some of the very juicy premiums because I was already in a lot of options. And because the market was dropping, I decided to just leave my options alone. I rolled over about 3 of them. So as you can see, I have a lot of catching up to do, but right now my account sits at 3,300, 565, assuming I close out all these options that I have open right now. If everything expires worthless, or what I'm usually doing is selling them, when they're worth around $3 to $1, sometimes $5, just so I can collect more contracts in that same week, I'll get around $3,700. So my account's still not down. My options are considered down, even though right now I'm still up $1,000, but I still have $3,400 to collect for a total of $5,089, which would bring me to this $37,000 number. So here's the plays, here's the options that I have, everything for the most part. So 3 of them, 4 or 5 expire this week coming up the 18th, 1 for the 26th, and then 2 for the last 2 weeks of July, which I'll probably keep them. They're pretty far out, so probably won't worry about them for now. This $86 one is very out the money. So I think, what are we at? Yeah, so on Friday, TQQQ closed as 77,552, which you can see right there. Maybe. But I'll come back to this chart when I get over my strategy, when I get to the part of my strategy. But for now, here's the option plays that I have. So overall, obviously, I'm still up a lot. So not too concerned with it. We'll just see what happens in this upcoming week. And I just saw the news about Trump signing a deal again. So of course the war's off, but we also know come Monday it can be back on. So let's see my performance. So as you can see, the big drop that we had. So my account was at 35,000 before the drop. Now it's at 33,000, assuming I closed everything. Still up, still not concerned about it. But if we see from April 6th to June 27th, it's going off the $3,300 number. So right now I'm up 18.74, which is pretty much the same as NASDAQ, which is basically what I trade, a derivative of the NASDAQ or QQQ. S&P 500, about 5% difference. So overall, still beating it. That's pretty much it for my portfolio. Just wanted to log into my actual Schwab account so you can see it. Now, to see the real value is what I like to call it. Here's a dashboard that I've created. So far, I'm up $8,200. You can still see the same $3,700 number. 28% away from earning $29,000 is basically the way I look at it. So you can see I still have 20,989 before my account has reached 100% of the starting value, which is 29,200. So 28% of the way there. This is my 52-week goal of 50%. So I'm already at 28%. So this yellow line is where I should be. The blue line is where I'm at. So as long as I make 50% this year, I'm more than happy. Obviously, I'm well over that, or on track to be well over that. But shit can happen. So we're halfway there, halfway through the year. Well, not even through the year. The year for me is April 6th of 2027. So we'll just see that right here. So this is a projection from April 6, 2026 to April 6, 2027. Right now, without compounding, I'm on track to earn 180% a year, which so far, even with this past week where I didn't even do any trades, which you'll see that shortly, all I did was roll, I'm still on track to make 188% or 44 or 180% or 44,000, which would bring my account to 81,000. And it takes into account the last 30 days. So every 30 days, this will update technically, is what it's saying. And right now, I average around every 8 days for my contract. So basically, one a week. And I try to collect anywhere from $50 to $120. And right now, I'm averaging $56. And that went down a lot just because of what happened this past Friday. Not no 2 Fridays ago. So if I was to compound now, I'll earn a factor of 1.27 or 2.96%. So instead of 81,000, with me compounding, I'll be at 103,000, assuming I don't take any money out, which obviously I plan on taking money out just for recreational stuff. But as of right now, I've only taken out $400, which I still need to put that back in, but I'm on track to make 103,000, which this number will even still change as the weeks go by. It may go down, it may go up, but so far, if you go back to my first video, this number is up significantly compared to when I first started. So added some milestones. So if I go to the last 30 days, my account will be at 50,000 according to, the last 30 days and 10 more weeks. So basically by August 24th, we'll be at 250,000 by September of next year. And then we'll be at $1 million in 112 weeks or August of 2028. So just thought this would be something fun to have just to see, how the account grows. But obviously I started this account basically at $30,000. And so far, we're doing pretty good. It goes down when I go to when I just first started because obviously it's not taking into consideration compounding. So if I don't compound, then I won't have $1 million until 2029. If I do compound based on the last 30 days, significant difference. August 11th of 2028. But I'll be happy when I reach this number. So a year from now, well, no, not even a year from now. So February 6th. So 34 more weeks. So I look forward to that. We'll see how things change though. So this is just something I decided to add to based off the contracts. So nothing crazy, but I'm planning on doing a smaller account. So to do a smaller account, I had to figure out what's the best size. And I think right now it'll be $5,000 because to open up one contract with leverage, I need around 33. Without leverage, you need $10,000. Personally, I'll say start at $10,000, but even if you start with 5,000 with leverage and you use 70% of that, well, it goes off this account balance, so I got to change it up. But still, you can buy 5 contracts with $37,000 accounts. So it's going off my current account balance, so I still got to update it. So guess you can ignore this part. So go over my June plays. So obviously I missed 2 weeks. So maybe the last one you saw was maybe me being up 1,200. The last week, so the first week of June, I made 1,400. And then obviously this is the week that we had that big downturn. So again, I didn't do anything, which I'll show you right now. All I did was close some contracts. So that's why my premium for the amount of closing has went up. And then I've rolled them over. So I still collected money. Just think of it as I collected $191 more dollars on top of this 1,400. So right now, still averaging around 2.37% a week, 7.39% a month, which obviously that's because June just started. So it takes in consideration the 2 weeks of June. So obviously this comes down a lot. And then so far I'm at 22% of 2026, which for me, 2026 started April 6th, which you can see over here. Well, you're supposed to be able to see April 6th. But either way, let's look at June. So this is all of my plays for June. So far in June, 1,600. Not gonna go over all of them, but you can see sold to open is how much premium I collect. And then bought to close is how much it cost me to close them. And obviously, the bigger the number is, the earlier that I closed it. And that's primarily because a 3 to $10 is insignificant compared to me collecting, $100. So even if I collected $90 for 1 week and I close in that same week, that's net $90. And then I can still open up another $100 contract with the same contract that I just closed. So I'll rather pay $3 to $10 and collect 90 to open up another $50 to $100 worth and potentially collect around $190 with the same collateral used. So big difference when you do it that way versus letting them expire. And then here's the first down week that we had. So June 5th, I guess, is when that first started. You can see these big closings, which is me just giving back premium. And then alternatively, I got big opens. So I may have closed two for 900, but opened another one for 1,000, and then closed 6, 5, 3, and another 900, but to open up 1,600 plus 36, which gets me back all the ones I closed. So I haven't programmed this to consider these rollovers. Right now, they just count it as me closing it and me opening a new one, which is exactly what a rollover is. So no matter how you think about it, you're still closing your contract that's down, but open up a new one that pays for the amount you closed and hopefully even gives you some credit for the new contract that you opened, assuming you didn't pay a debit to roll it further down. I usually just keep it at the same strike because I'm trading a derivative of the triple Q, which to me is programmed to go up because a lot of people's 401ks are one way or another directly tied to either the S&P 500 or the Nasdaq. So it's not like I'm doing. If this was Tesla, I wouldn't be as confident because who knows when Tesla decides to recover? It could take a year. It can take 1 minute. But moving forward, you can see a big close for 1,600. But all in all, this is where this $191 comes from because I had big closes, but also had big openings. AKA, I rolled over for a profit. I won't collect this premium though until either the triple Q comes up to, I think my highest one is $86. Let me go back to that. Yeah, so my highest one is $86, which is the third week of June. Long story short, I don't have to wait for it to get to $86 because technically I'm already in profit from it. So I can close it right now. But again, I'm not in no rush. I'll leave it for as long as I need to. Hell, I can even roll this out for a whole year if I really wanted to. But I play them as they come. Right now it's at $77, so these ones are pretty close. So these ones are already pretty good, but again, come Monday, Tuesday, Wednesday, Thursday, Friday next week, we can drop another 3%, which will be 15 or so percent on triple Q because it's 3x leverage. So I'm prepared for that. I would love for us to drop because I do have more money. I have other accounts. This is just my public account. So on my other accounts, obviously, I buy. And then I'm also doing things where now I'm gonna start doing some poor man cover calls, and I'm gonna start selling some selling calls because right now 100% is just me selling puts. But since it's finally retracing, I feel more confident buying long dated calls, maybe letting some of these expire in the money so I'll get assigned and then start selling calls on those assigned shares and also selling calls on some of the long dated purchases that I'm looking to do. I'm not gonna call them leaps just yet because for me, a leap is anything over a year. I'm only thinking about doing 3 months at a time, so DTE 3 months. But you'll see how that's gonna work. And right now, I'll show you exactly what I'm thinking. So if we come to the chart, move it to the daily. So obviously it's a weekend, so the market's closed. And I actually haven't updated these charts, so some of these ranges that you see are old. And obviously, you can't make a range on a daily because, really the best range is right here. So if we can come back down to anywhere in the 50s, I'll be ecstatic. I'll still make sure, I'm buying. I'm still gonna be selling calls, but technically, this is a range I'd love to come down to. I do think though, next week will probably be somewhere around here. So if we do drop to 65, 62 area, I'll be happy. We already kind of retraced this candlestick. So guess all I'm trying to say is the next puts I'm gonna be selling are anything under this candle close right here. So basically $70 to $73. As long as that premium looks good, because I'm not going over none of this right now, but the volume's picking up. Everything's about to start curving back over. The RSIs are oversold, so they're gonna start uh, rolling back over. So I feel pretty confident for this week coming up to be anywhere from. I don't think I'll get a good premium at 69, but start selling some premiums around 72 to 73, and then of course one or two around 75, and still leave my current ones right here open. So these ones are pretty high, so I'm gonna add some 73s to 75s and just keep it rolling. I wouldn't call this the wheel strategy because I would have let myself get assigned and start selling calls, but at this point in time, I'll just rather roll it over and collect the bigger juicy premium. As long as I got cash, I won't get margin called. I still have a lot of cash, which I think this one is around $10,000 in cash still, which to me, that's more than enough to cover all these options with margin. Without margin, I would need a lot more cash, probably somewhere around $70,000. But I think that's pretty much it. Like I told you, where's that? I'm on a track to turn $29,000 into 103,000. I don't even know what that return is, but it's a lot more than 180. I can tell you that. Yeah, 'cause 30, 60, 180 is probably around like, actually, maybe it might be 103. Actually, I think this is 180. Whatever. I'm getting sidetracked. But regardless, right now I'm averaging $212 a day. Currently up 28%. And I collect an average of $56 in premium. And I usually hold it for around 8 days, which this used to be a lot less. So I'm happy with $212 a day. That's the average person's salary, I guess, assuming they work full time. 30 what, $44,000 a year. I don't know if that's even average. It might be above average, but you get my point. So pretty much it. I'll try to get my next one out this week, assuming I'm still not working on this. But it's not too hard to make these videos, so you'll probably see me next week. But I'm happy with my return so far, and since I'm all cash, I need the market to come down more so I can start spending more money and stop holding on to so much cash. But that's it for now.